Namaskar, I am Parsuram Shukla, Training Associate Economics, KVS JIT Bhubaneswar. Welcome to my economics class. Today I am presenting the third video lesson. In my previous video lessons of Chapter 1 and 2 of Unit 1 of Class 12 Economics, I have discussed what is macroeconomics and basic concepts of macroeconomics. I hope you have watched my video lessons of Chapter 1 and 2. If you have missed it, you may watch it. The link to it is given in the description box. Today I will discuss Chapter 3 with you, that is circular flow of income in two-sector model. The contents to be covered in this Chapter 3: meaning of circular flow of income, types of circular flow in a simple economy, that is two-sector model. The learning objective: at the end of this video, you will be able to state the meaning of circular flow of income, explain the types of circular flow, state and explain the circular flow of income in a simple economy, that is in two-sector model. The first concept is circular flow of income. What does it mean? It refers to cycle of generation of income in the production process, its distribution among the factors of production, and finally its circulation from households to farms in the form of consumption expenditure on goods and services produced by them. There are phases of circular flow of income. There are three phases. There are three different phases, that is generation, distribution and disposition in circular flow of income, as shown in the given diagram. Please see the diagram. Production phase, generation of income. That means in the production phase, the income is generated. So after the income is generated, it should be distributed. So that is in the income phase, distribution of income. So after the distribution of income phase is over, then there is the next phase, that is the income has to be spent. So that is expenditure phase, disposition of income. That means income has to be disposed of. That means in the form of expenditure. So again, after the expenditure phase is over, that means income has been spent. So the next is there will be need of further production. So it gives rise to production phase. So like this, from production to income, that is the distribution of income, then again the income has to be spent, that is the expenditure phase. So again from expenditure to production, then income, then expenditure, like this. This is the circular flow of income. So this is a never-ending process. That means in detail you can say generation phase. In this phase, farms produce goods and services with the help of factor services. How the farm produces goods and services? Farm produces goods and services with the help of factor services. Distribution phase. In this phase involves the flow of factor income, that is rent, wages, interest and profit, from farms to the households. Then the third phase is disposition phase. In this phase, the income received by the factors of production is spent on the goods and services produced by the farms. In this way, that means the circular flow of income. In this way, income generated in the production units reaches back to the production units and makes the circular flow complete. So as I have shown in the circular flow, you see the three phases. That means the circular flow is a never-ending process from production to income, then again from income to expenditure, then when there is expenditure, there is need for further production. So this goes on in this way. This is a never-ending process. Therefore we say, in this way, income generated in the production units reaches back to production units and makes the circular flow complete. Then types of circular flow. There are two types of circular flows, real flow and money flow. Real flow, it refers to the flow of factor services from households to firms. Remember, it refers to the flow of factor services from households to firms, and the corresponding flow of goods and services from farms to households. That means flow of factor services from households to farms and flow of goods and services from farms to households. It is also known as physical flow because there is no exchange of money. There is exchange of goods and services without involvement of any money. So this is shown in the diagram. There are two sectors, farms and households. Households supply factor services to the farms and farms produce goods and services, and these goods and services are supplied to the households. So there is flow of factor services from households to farms and flow of goods and services from farm to households. It completes the real flow. Then we have money flow. It refers to flow of factor payments from farms to households for their factor services and corresponding flow of consumption expenditure from households to farms for purchase of goods and services produced by the farms. It refers to flow of factor payments from farms to households for their factor services and corresponding flow of consumption expenditure from households to farms for purchase of goods and services produced by the farms. As shown in this diagram, the households, first you begin from these farms. Farms provides the factor payments because they have utilized the factor services from the households. So they have to provide the factor payment to the factors of production, land, labor, capital and enterprise in the form of rent, wages, interest and profit. So it goes to households. So what the household will do? The household will consume. So they will be spending on goods and services. So from household, the consumption expenditure. So it goes back again to this in the form of income to the farms. So this completes. There is flow of money from farm to households and from households to farms. So therefore it is known as money flow. Money flow is also known as nominal flow. I remind you here, real flow was known as physical flow. You can see it again. It is also known as physical flow. Real flow is known as physical flow. And money flow is known as nominal flow. It involves exchange of money between the two sectors, that is households and farms. Then you see the difference between the money flow and the real flow. It is given in the tabular form for simplification of your understanding. Real flow, it is the flow of goods and services between farms and households. Money flow, it is the flow of money between farms and households. Real flow, it involves exchange of goods and services from farms to households and from households to farms. It involves exchange of money. That means again it is between the farms to households and households to farms. Then in real flow, there may be difficulties of barter system in exchange of goods and services, whereas there is no such difficulty in case of money because goods are exchanged against money. But in barter system, the goods are exchanged against goods. Therefore, there may be difficulties of barter system in exchange of goods and services because there is no involvement of money. Whereas in money flow, there is no such difficulty because the exchange is between the goods. Goods are exchanged not against goods. Goods are exchanged against money. Real flow is known as physical flow and money flow is known as nominal flow. Circular flow in a simple economy, that is in two-sector economy, that is the third concept to be discussed in this chapter. A simple economy assumes the existence of only two sectors, that is household sector and farm sector. Households are the owners of factors of production and consumers of goods and services. Firms produce goods and services and sell them to the households. Note, for your simplification of understanding, it is the simplest form of closed economy. That means this two-sector economy or simple economy is the simplest form of closed economy in which there is no government sector and foreign sector. Only there are two sectors, that is households and firms in a two-sector economy, and it is also known as simple economy. Then assumptions to have this circular flow of income between the households and firms. There are only two sectors in the economy, that is we have to take households and firms to understand the circular flow of income. It means there is no government sector and foreign sector. Household sector supplies factor services only to firms, and firm hire factor services only from households. The firm will not go to any other source to hire the factor services, and the household supplies the factor services. Household will supply the factor services only to the firms, not to any other unit or not to any other entity. Firms produce goods and services and sell their entire output to the households. They will not sell to any other. Households receive factor income for their services and spend the entire amount on consumption of goods and services. That is to be assumed. That means households receive factor income for their services and spend the entire amount on consumption of goods and services. They are the consumer only. They are not the producer. There are no savings in the economy. That is, neither the household save from their incomes, nor the firms save from their profits. That means neither the household will save from their income, nor the firms will save from their profits. Means whatever is generated, that will be distributed, generated in the form of production, that will be distributed in the form of income, and that income has to be spent by the household sector, as you have understood in the earlier sections of this presentation. Then you see this circle, this diagram, to understand the circular flow. You see there are two sectors, households and firms. What the household do? The household supplies, you see this arrow mark, household supplies factor services in the form of land, labor, capital and enterprise. To whom? To the firms. And what the firms pay to the households? The firms pay to the households in the form of factor payments, rent, wages, interest and profit to the households. What these households do? The households spend this income they have received from the firm on the goods and services in the form of consumption expenditure. So once again, household supplies factor services to the firms. Firms produce goods and services, and these goods and services are consumed by the households in the form of consumption expenditure when they spend, that is, they spend on the goods and services. So there are two flows, as you have understood in the earlier section in this presentation: real flow and money flow. Real flow, you see, and money flow, money flow. So real flow, you see, the flow of factor services from households to firms is real flow. Another real flow, the flow of goods and services from farm to households is real flow. The flow of factor payments from farms to household is what? Is the money flow. And the consumption expenditure on goods and services from households to farm, this consumption expenditure is money flow. So there are two flows, real flows and money flows. Then you see the summary, whatever you have understood and whatever you have discussed. In the circular flow of income, production generates factor income, which is converted into expenditure. This flow of income continues as production is a continuous activity due to never-ending human wants. It makes the flow of income circular. Thus, total production will always be equal to total consumption. Factor payment is always equal to factory income. Consumption expenditure will be always equal to factory income. Real flow then will be always equal to money flow. I emphasize here this flow of income continues as production is a continuous activity. Why the production is a continuous activity? Because human wants are never ending. Human wants are due to never ending human wants. We always want, so we need. So therefore, when we need either the good or the service, so where from it will come? It will come from the production unit. So the production unit will continue to produce. So production is a continuous activity. Then for all of you there is a memory testing, whatever has been discussed. Please see this. There is a questionnaire. So I request you to open your notebook and write down the answer to these questions. The short answer type question, it may be one word or it may be one sentence. Who produces goods and services? Which sector spends the money on purchase of goods and services produced by the firms? Name the 3 phases of circular flow of income. As soon as you see the question, you write down the answer in your notebook. What does real flow mean? What is the other name of real flow? Suppose when I read this question, to my mind, as I have listened to the presentation, the real flow is otherwise known as physical flow. So what is the other name of real flow? The physical flow. That is just an example I am showing or giving to all of you. What do you mean by money flow? What is the other name of money flow? State one difference between real flow and money flow. How many sectors are there in a simple economy? Name them. In the circular flow of income in a simple economy, total production is equal to dash, factor payment is equal to dash. I hope you might have noted all the answers to all these questions in your notebook. Now you have to check whether you have done correctly or not. See the answer to these memory test questions. Who produces goods and services? Firm produces goods and services. Which sector spends the money on purchase of goods and services produced by the firms? The household sector. Name the 3 phases of circular flow of income: production, income, and expenditure. That is generation of income, distribution of income, and disposition of income. What does real flow mean? It refers to the flow of factor services from households to firms and the corresponding flow of goods and services from firms to households. What is the other name of real flow? Physical flow. What do you mean by money flow? It refers to flow of factor payments from firms to households for their factor services and corresponding flow of consumption expenditure from households to firms for purchase of goods and services produced by the firms. What is the other name of money flow? Nominal flow. State one difference between real flow and money flow. Real flow, it involves exchange of goods and services, whereas money flow, it involves exchange of money. How many sectors are there in a simple economy? Name them. There are 2 sectors in a simple economy: household sector and farm sector. In the circular flow of income in a simple economy, total production is always equal to total consumption. Factor payment is always equal to factory income. Now some assignment for all of you. I have given you some questions on the pattern of board examination. Very short answer type question. This question of 1 mark to be answered either in 1 word or 1 sentence. That is the board guideline. What is meant by circular flow of income? What is the function of households in the circular flow? That is in 2 sector model. Name the 2 sectors in which real flow takes place in a simple economy. Then another type of question in the board examination, they ask short answer type questions either for 3 marks or for 4 marks. So it should be, if it is 3 marks, it should be answered in 60 words, or if it is 4 marks, it should be answered in 80 words. Question number 4, what is meant by circular flow of income? Distinguish between money flow and real flow. Question 5, households and farms depend on each other in the circular flow of income. Justify the statement in case of a two-sector model. So I mean to point out here, you prepare the answer for 3 marks and also the 4 marks. You prepare how to write the 3 marks answer, that is in 60 words, how to write 4 marks answer in 80 words for both these questions. That will be a practice for all of you. Thank you very much for watching my video minutely. Please give your feedback to the mail ID. My mail ID is parsuram.shukla@gmail.com. Telephone number 99386 49454. You feel free to ask me, to disturb me in this telephone number, your query and whatever you want to ask regarding this presentation. I hope you are benefited by these educational videos. So kindly like it and also subscribe so that next videos reach you immediately. See you all with my next video on Chapter 4, Aggregates related to national income. Thank you very much for watching my video. Thank you all.